Good morning. My name is Miguel Gonzalez, and I'm a certified retirement counselor with over 20 years of experience helping clients in retirement income planning, overseeing investment of funds, and designing retirement plans. Now that the new year is officially underway, let's talk about the very important required minimum distributions, or RMDs, that you must begin taking from your retirement accounts. As age 73 nears, it is critical that you begin considering how you want to handle these RMDs that you are obligated to withdraw from your tax advantage retirement accounts, including 401ks, 403bs, 457, and individual retirement accounts, IRAs. According to U.S. New Money, 62% of Americans are not even aware that they have to take an RMD, and a fair share of those that do make mistakes they could have avoided. Here are 5 common RMD mistakes that could prove costly. Number 1, forgetting to take your RMD, right? We lead busy lives, even as retirees, and it is more common than you think for people to forget to take their RMD before the applicable deadline. Doing so may result in a 50% penalty imposed by the IRS. One recourse that might be beneficial is to contact your financial institution and find out if they have automatic RMD withdrawal options to help you stay on time. These choices vary from monthly distributions to semi-annual, quarterly, or annual. Staying on top of your financial responsibilities can help you save money and alleviate some of your financial stress. Number 2, delaying your first RMD. For individuals who need extra time to prepare for the withdrawal, the IRS allows you to defer your first RMD to April 1st of the following year. This strategy may not be the most beneficial approach, as delaying that first payment will require you to make 2 RMDs within a year. If you have large accounts, you could find yourself looking at 2 sizable taxable withdrawals in the same year, bumping you into a higher tax bracket and potentially subjecting you to the Medicare surcharge. Number 3, using the wrong balance to calculate your RMDs. Many people will try to calculate how much they owe for their RMDs. However, they won't use the proper balance. This will generate an RMD less than the required amount, and you may be subject to a penalty. If you withdraw more than the threshold, it is fine. There is a floor but no ceiling regarding the withdrawal amount. According to the IRS, an RMD is calculated for each account by dividing the prior December 31st balance of that IRA or retirement plan account by the age-based distribution period found in the IRS table. 3 tables provide those distribution periods. One is if you're married and your spouse is the sole beneficiary of your account, and if they are younger than you by 10 years or more than you use the IRS's joint and last survivorship table. All other original IRA owners use the IRS Uniform Lifetime Table. Or you could use, if you inherited your IRAs, you will use the Single Life Expectancy Table. Number 4, mixing plan types. You are not allowed to use the withdrawals from different retirement accounts to meet the RMD threshold for one of those accounts. If you have multiple 401ks or 457b accounts, you must withdraw an RMD from each account separately. If you have multiple IRAs or 403b plans, you can take your total RMDs from just one of those accounts. Regarding employer-sponsored retirement plans, if you have more than one from a former retirement plan with different employers, you must take the RMD from each account separately. And number 5, paying distributions for both spouses from one spouse's account. There are several financial assets that married couples can hold jointly. However, retirement accounts do not fall into that category. Therefore, retirement accounts must be owned individually, and the responsibility to take the RMDs applies to that owner, even if you file taxes jointly. Other key takeaways regarding RMD is that if you own a Roth IRA, you are not required to take an RMD while the account holder is alive. If you inherited the account, you may be required to take distributions. Failing to take this action could subject you to heavy penalties. Another thing to consider is that RMDs are considered income, and a spouse who withdraws too much may also owe more in Social Security and Medicare premiums because of the higher income. But get help from a financial professional before making financial decisions, because with so many moving parts and the complex nuances involving with taking RMDs, getting help from a financial professional could save you a headache and potentially a significant amount of money to the government that would otherwise get. Take 5 minutes and schedule that meeting with your financial professional today before tomorrow will come quickly and you want to stay ahead of the curve. Once again, this is Miguel Gonzalez with Cortburg Retirement Advisors. Please take a moment to click the like icon and don't forget to also subscribe to my YouTube channel to receive our weekly video podcast every Monday morning. Thank you for watching. I look forward to seeing you all next week.